Good morning, everyone. Happy September. Happy back to school. Happy end of summer. We never really had one here in the Baltics. Summer was basically canceled, but that's okay. Got a little sun last week in Italy with my godson, which was fantastic. And very happy to be back to work and speaking with you all now. So, want to do a little bit of power curve research today, show you the latest. It's been a little bit of time since my last update, almost a week, and some softness in price, certainly making people think a lot about what's happening. So let's go ahead and look at some stuff. This is a great creation by Fred Krueger. He's got a book coming out soon as well. And let me see if we go back to this, where it shows all the credits. Actually, I'm not sure. But anyway, a lot of you have been asking me for websites, my website to show all the charts. Again, I'll come back to this. This is my website again. I do have this. I do have the curve, but this is also a nice one. And it's good to see different people's approaches. So they have the curve right here. I'm sure they'll work more on it. But they have the curve here. Here's the dates. They don't actually have price layered over it. I do on mine, but all this is an iteration of everybody's work. But what they have here, which is nice, is this little dashboard feature. So based on the multiplier, in my opinion, is the best way to look at it. It's not, I didn't even notice this, a little bit of a explainer here on what the multiplier is, how it works. Basically, market price divided by model price, you get the multiplier. I think that's the cleanest, easiest, certainly the most American way to look at it, because Americans like one number. That's the challenge with the percentile quantile model that Plan C works on, which is still great. I mean, that's a great, smooth-looking model, but you got to kind of look at it to understand it. With the multiplier, it's a hard number, right? So as I've talked about a lot, I think 2 to 3 is my max based on all the evidence of where Bitcoin could be this cycle, if it even gets there. I know people are doubting it with the softness in price. We'll get back to that. But this is where price is right now based on the multiplier. Mine is actually under 1, which I will show you. And, that's how it goes. Got the R squared, got the different prices out, December 2030, December 2035. And we can see how all this goes. There is a difference here, which I want to talk about. And this will get back to the stock to flow model, because those are larger differences. But notice here, so they're quoting Bitcoin price is 109K at the moment. They got CoinGecko's API. Their model is 103. Everybody's going to get slightly different data because everybody has slightly different market prices. Mine is closer to 110. Okay, and if I showed you right now, the latest that I pulled into the model. I update mine, all the time. So mine's 109. All right, so it's a 6K difference. It might seem like a lot. It kind of is a lot, but again, we'll show you what a difference is when we look at other models. This is totally normal, to be expected. There's rounding. There is different data, especially in the early years, the very, very nascent years of Bitcoin. So there are going to be differences. All right, so they're pulling in 103, 375 for me at the moment. Black line on September 1st. I just pulled in. I pulled in 112. That's the model. It's a model, as I said, closer to 110. The price 109. All right, so 112 for me, 103 for them. Okay, so 9K difference, which again is not nothing. Nothing is perfect here when we're modeling finance. But as I'll show you in a second, it's much better than other models doing other stuff. I also like that they have, we can put Bitcoin and gold. So this is obviously dollars, Bitcoin and gold. All right, how many ounces? You see here we're well under trend. All right, as I've said for a while now, if you're a gold bug, you maybe missed the Bitcoin train. It could be a very good moment to still get in, especially if we're going to go parabolic in Bitcoin. We will see, but it could be a good moment. They have BTC divided by USM2. I'm not a fan of this, but I understand why they did it because it's kind of easy to do. Oh, they actually quoted me. Interesting. They didn't just do USM2. They quoted me. Thank you for that. But this is not. Yeah, so they're kind of quoting me to look at other stuff. This is the U.S. If I see 22,000 billion, that's the United States. It would be more interesting either to go on the global base money or global broad money. You could do both and just see where we are as a metric. And I would also use it on market cap. So, not exactly sure how they're doing that because a multiple of 0.95. Bitcoin obviously at $2 trillion. It's well below this. So I'm not exactly sure what they're doing. Maybe they're taking log on the price or log of this versus the price. They could do many different things. It looks like they have an index actually. I don't see an explainer here. But anyway, point is a lot of good stuff coming here. And I want to show you one that they did as well, which is take price divided by the S&P 500. Okay. And so that's what I want to show today. So here we have the dollar. Right on trend, a little bit below trend. And again, this to me is absolutely nothing to worry about. We're literally on trend. All right. If you look between the 6 and the 7 there in the tooltip, the 6 is 106K, the 7 is 123K. The mode, the most observations is going to be somewhere very close to this. It's basically 2/3 of the time, which is very close to the trend line. And, that's what it is. So, yeah, I know people get freaked out when there's softness, especially coming down from 120. There's another thing I want to talk about today is I don't have it really compiled yet, but we got to start looking at what Checkmate is doing and the guys at Glassnode. Let me see if I can pull up a chart from him in a second, but I'll come back to that. But anyway, it's the it's a question now of UTXO management and where we are basically, because the supply of 2011 dumpers over 100K, which was a goal, a benchmark for a lot of people that were in early, does not seem exhausted, which is fine. All right, if you're in that early and you're ready to, cash out in order to buy something else, whatever it might be, certainly within everybody's rights. So I think, in my opinion, that's why we really see the softness, and I think that's borne out in the data. And again, in my opinion, even more than the Wall Street stuff. Although I can understand the Wall Street appetite creating a different demand dynamic than prior cycles, which were all, not all, but primarily retail. Again, you started CME futures here on the short side right here in December 2017. Okay, so let's just look at a couple things here. Again, for me, I'm just not worried about any of this. Again, it depends on your horizon, but nothing here worries me. Here's another. Now that we just talked about supply coming in to dump or to take profits, this is a great one from Checkmate. All right, so what you see here, this is from Glassnode. You see basically the realized profit is a huge amount of BTC. Okay, so they got these little mountains piling up. Realized profit which means, um, the amount of coins that are selling at a profit during the cycle. All right, so where they bought in at a lower price the last time the coin moved, the UTXO moved, was at a lower price. The next time it moved during the cycle at a higher price. That's all this is showing. Realized profit, you see it peaked here in 2017, 3.9 million here already. This is a great chart, by the way, 3.27 million. Did not, we already passed last cycle's double top. Interesting to know. We have not passed 2017's top. Also interesting to know. And if I go and read what he said, basically, what this means is Bitcoin demand has absorbed an unbelievable amount of capital as the coins of the cycle are 100x more expensive than the 2015-2017 cycle. The sell side story is also a story of demand, and it's wildly bullish long term to see this much capital changing hands. Love Shack as well. So again, that's the story, I think, of where we are and why there is this sort of softness or levels around trend. Going back to gold, all right, my chart again, 100th and the 0th percentile are going to be pretty hard things to hit ever again. Never say never, but pretty hard. So again, as we saw here in the, and this website, by the way, is b1m.io, b1m.io. We go back to gold. Just talked about on their metrics, we're soft, all right? If you look at a multiple version of this, we're close to 0.5, which is pretty wild. We're really right at 0.6x, which is actually the 50th percentile. Okay, so it's number 5 there. See, the 0.6x is the 50th percentile. Okay, so 50% of the time, Bitcoin and gold, relative to the trend, has been priced lower or higher than the current price. Literally, we're at the 50th percentile range, but that is well under trend. Okay, so again, in dollar terms, we're right on trend. In gold terms, this is why I keep saying, if you're a gold bug and you've been following Peter Schiff for a long time and you're finally happy that gold is taking off in price, maybe you want to consider revolving into Bitcoin a little bit because you're still looking quite cheap in Bitcoin terms relative to the trend. Not as cheap as 2022 when you got all the way down to 9 ounces of gold per Bitcoin. Only 9 ounces of gold per Bitcoin. Now, it's pretty expensive, 35 ounces per Bitcoin, but still the trend is 61. So it's a very interesting thing for gold. The one I wanted to show next, which I saw Fred posting about as well, is S&P 500. This is very esoteric. Nobody can buy the S&P 500. You can buy SPY or these different ETFs that track the S&P 500 now. But I'm just taking the index itself. So it's how many times you could buy the index. All right, so as usual, Bitcoin is rounding to 0 here in the early years. Just like gold, you start to reach parity around 2017. It's literally 1 for 1. And now up we go. So again, beautiful trends. I don't know why anybody would doubt these trends. Peter Schiff's not allowing himself to follow these trends has hurt a lot of subscribers over the years, a lot of followers of his. Just like with gold, stocks are ripping now. So Bitcoin, in terms of stock, looks, I don't want to say cheap, but it's certainly more appropriately valued on the buy side than the dollar, than if you just bought for dollars. Okay, so again, the lows back in 2022, you could get you could buy the S&P 4 times. Basically now, you can quote only buy it, or you need 17 times the S&P 500 to buy one Bitcoin. Trend itself is 24. And this should be above the 50th percentile. No, it is above the 50th percentile, below the 60th. So it's very similar, actually, position for where gold is. You know, the blow off tops were huge here. Okay, still not the 100th percentile, which shows you how far away the 100th percentile. You need to start looking at the 90th to the 100th when we get to blow off top territory. That's not this chart, but we hit it in 2017 and we just hit it in 2021, first top. So, you know, again, it's soft. It's soft. Gold and S&P 500 pricing in Bitcoin is soft compared to the dollar, but it's not like it's on a downtrend. You know, yes, I know we have these little dips. We have these Bart Simpsons all the time. It's not this. Could we go back there? Absolutely. But, you know, again, there you can follow technical traders more than me. We're just not generally moving back down. We're moving from one band to the next, higher and higher and higher, generally. Higher highs, higher lows, as they say. So to me, this doesn't worry me, and it shows bullishness, and it also shows opportunity for people that may thought they have missed Bitcoin. So they have some stock gains, some gold gains. They want to maybe extend further at a better alpha than they could get in those markets. You could get it in Bitcoin in the next bull run if past is prologue. Because just like with gold, just like with stocks, we extend above the 90th percentile each time. And of course, just like with the dollar, we extend well above each time, each bull. Okay, now I want to get to the headline of the show, stock to flow idea again. Yeah, that's all I wanted to show. If you have questions about the S&P, just let me know. But again, I don't want to lecture too long today, so let me know if you have questions. So Plan B posted a very simple trend line with Bitcoin price in dollars versus the stock to flow in units. As we know, stock to flow is basically the inverse of the inflation rate. So as the inflation rate goes down, or the unit of new ratio of new coins goes down, stock to flow goes up. It looks like a pretty good trend. R squared, he puts any questions, like somehow he's a power trend follower all the time. And I just put a little post here. Of course, he wasn't going to respond. As I wrote, I presume this only includes BTC price growth in the calculation of the coefficients, which is correct as BTC moves in power. I said, unlike adding in commodity growth in the calculation of the coefficients, which is erroneous from your original models as commodities move in exponential. Giovanni had a take on this as well, posted mine below, and then wrote a couple other things. Yes, he says it's arbitrary, shoehorned model. When your parameters are derived, when you use the parameters derived from the fit, if you get a worse and worse fit, and this is updated parameters, it is even worse with previous derived parameters. I will show you exactly what he's talking about. But what I really want to show you now is just direct you to my point about the coefficients. So I need to actually get a picture of this because I haven't pulled it up. Here is one of his. He did this multiple times. Okay. Multiple times. But this one, for example, this is actually an article of his. Doesn't really matter. This is where he sort of initially derived this idea that gold has a stock to flow, silver. He put other ones with platinum and palladium as well. He's done a variety of this matrix right here, which is basically market value on the y-axis and stock to flow on the x-axis. All right, so he's posting random Bitcoin clusters here, which is also a problem, as Giovanni talks about a lot. And then he just arbitrarily puts a silver one and a gold one. Now, I've talked about this ad nauseum, so I don't want to go in too much here. But the main issue is this is a power regression, and it's okay to do Bitcoin with a power regression, even with stock to flow, although it's not as good of an indicator as I'll show you in a second. But this is completely erroneous. To put in an exponential commodity like silver, an exponential commodity like gold, why would you overlay that with the change in Bitcoin's stock to flow as time goes on or as market value goes up for Bitcoin? Because, as I've talked about many times, as market value goes up or down for gold and silver, relatively speaking, the stock to flows stay the same. So if you picked silver, I don't know, way back here at some prior time period when it was worth much less, or gold way up here when it's at the top now, but it's more valuable now, by the way, than it was here. Here it's about less than 10 trillion, so now it's up to already 20 trillion. Notice the problem. Bitcoin moves on the diagonal as its stock to flow evolves, moves on the diagonal here on the straight line. But if you would take an exponential asset, stock to flow is fixed, i.e. the growth rate is fixed. It's constant growth. I've said this many, many times. So as you move over time with gold or silver, they only go up and down, up and down. I think I need like arrows to draw this more. They just move up and down. It's a completely different math function. Doesn't fit here. Completely erroneous. Completely erroneous. So for all this cross-asset model idea, how he was building his coefficients, building his stock-to-flow idea, it was just completely erroneous. Remember, he put platinum, palladium on some of these. Here's a different one. Doesn't really matter. It's just completely wrong. So, so Giovanni commented about this. Plan C I want to come back to. So here I have this model. I've shown this as well before. Here we got the power trend. Remember how I said my power trend is 9K off of Fred's trend, and these guys that are putting this together, which is fine. People are going to have different points. Let's do a couple things. Again, it's always important. First of all, another thing I keep hearing Plan B talk about is that Bitcoin moves in exponential. It's a very strange thing to say when you're posting power law models. You're posting power law models when Bitcoin moves in exponential. So again, forgetting stock to flow, let's just shoehorn in exponential and see how that looks for Bitcoin. Okay, so there's a beautiful looking power trend. You can see clearly that it fits 96% R squared in USD terms over time. It's the same model that I have today, same exact thing. Should be pulled in with the same, September 1st, 109, 112K on the model. Let's shoehorn in an exponential trend for Bitcoin. Bitcoin doesn't follow exponential. It's not even close. It's not even close. Way under it here. Sorry, way over it here. Way under it here. And now we've been under it since 2022. Completely not even touched the model. What's more, let's just use basic logic to understand that Bitcoin doesn't move in exponential. 108K is the price. This I can't do every day when I have this zoomed out. All right, let's zoom in. Let's get to September 1st. 109K is the price of my model as I pulled it in. All right. I know people are freaking out that it's not 120K, but we can get back to that. The power trend that I calculate is 112K. 112K. If Bitcoin were exponential, it should be around 600K at the moment. It's just not what it does. It's not what it does. Bitcoin is not an exponential asset. The R squared is worse here. The price is insanely bad. I mean, it'd be great to have that price. I'm always happy to say that, by the way. I'm happy. These are great things to be wrong about. But as trying to help people along this journey, these walls of worry, you might want to explain it the correct way. We're not even close to a 600K price. Could we maybe get close to that in this bull run? Maybe. I'm on record. I've said many times 2 to 3x the trend. Trend at the end of the year is 125K. See the black line, the real trend, the power trend. 2 to 3x is 250 to 375. Still, in this case, that's half of what the trend line exponential growth does. So it doesn't look great. It just doesn't look great. Bitcoin is not exponential. As much as people want to say it's exponential, as 1,000 million one times you've seen it on Twitter that Bitcoin is exponential, it's not exponential. It's not an exponential asset. It's a very unique asset in the history of traditional finance. It grows in this beautiful, scaled, sustainable curve. So continuing to say that Bitcoin is an exponential asset, which this gentleman does all the time, and also weirdly sort of drawing power curves now and ignoring the past goofiness of putting gold and silver, which are exponential assets, on a power curve, creates a lot of confusion and unnecessary information, wrong information. Now, let's take off exponential, okay? Let's look at his 2019 stock to flow trend right there, right? This is taking in mind similar coefficients as this. I think this is the 2020 model, if I recall. Yeah, it's 2020. I'll show you that in a second. Again, making these clusters, putting them against gold and silver, like that's somehow a magical thing. Which is not the case. Another thing, he just locked it in, like somehow you need to lock it in. There's no problem updating models as they go, but he sort of locked it in. What you see here with this stair-step phenomenon that happens with the stock to flow is it's not going to catch the bulk of the data. It can catch the tops, but it can't really catch the bottoms. The 2020 model was 2020. Yeah, 2020 model is even worse. All right, so here's the 2020 model. This is this model that he derived his coefficients from this picture. So I put them into the model. There are the coefficients right there. See it? There's the coefficients. So you put them into the model and you get just a way wrong model. But let's even ignore this, which I think is kind of pointless to do, is just take random dates in the past. You should always update it. But we can still back test what we have, like I'm doing here, to see how good it was. So how good of a predictor were these models? Well, until today, the 2020 model said we'd have 6 million Bitcoin, $6 million Bitcoin right now. Can you imagine in 2021, perhaps thinking we're going to have $6 million Bitcoin in 2025 based on the model, when we have $110,000 Bitcoin, which is exactly what the power trend predicts, which I'll show you in a second, versus the 2019 model, which is actually still a little bit better, which again is just a random date that is picked from the first article, which again is after Giovanni and myself were posting about the power curve. This is better. Starts to look a little bit more like exponential trend, which should also tell you something about how the stock to flow clustering works, especially when you put gold and silver coefficients into a power model. So it's just not close. It's not a good predictor. At the very bare minimum from 2021, at the very bare minimum. But then you got to look at other things too. Like look at this. It doesn't even hit the price from 2010 until 2015. That's 5 years where both of these models don't even hit the price. We were just in a period basically from 2015 to 2020 where we kind of hit it. But you got to look all around the model to understand if it's good or bad or indifferent to what you're doing. So this is pointless to look at these. They're way wrong. Bitcoin is not exponential. It's way wrong. Now, let's go ahead and look at what he did here, more or less. He's doing a very, again, cherry pick thing like he likes to do. He's cherry picking few values. I have what he's basically done. I don't have the stock to flow handy. Sorry, the R squared handy. It's probably pretty good, but it's not as good as the power. So you can't always use the R squared. But here is the stock to flow as it would continue. So for example, this is a very poorly constructed stock to flow. He's using gold and silver. The red in the blue, the red does not use gold and silver coefficients at all. I at least do it the right way, which is more of what he's getting to here in this latest chart. Anyway, here's the red with only Bitcoin price coefficients. Okay, so it's better, but still, you're running up on the 4-year cycle. You're assuming the 4-year cycle will somehow catch the top. And again, it doesn't, the trend shouldn't be the top predictor. The top predictor should be something that's outside the scope of the trend. You get what I'm saying? Like, if we overextend the trend, then you should have these nice looking bands. It shouldn't be like here where sort of the top is the trend. That doesn't really make much sense. At least it was for 2021. 2017, of course, it did go over the multiple. But anyway, this is better. The red is better. All right, you see it even fits better in the past. Well, they're not precise, but that's fine. It's better. Still 3x different from the power curve, which is the correct curve. Okay? 3x different. 2020 trend we can forget about. Doesn't make any sense. Okay? So it's 3x different. Now here's the key question. We have these two curves. All right? This red line is essentially what he's doing, but mine is more detailed. Sorry, not here. Here. He's taking a very simple, like the most cherry-picked of curves. He's doing a couple points, maybe around the halvings. I don't know exactly what he's doing. It doesn't really matter. To get a 99% R squared, 99.6 R squared. I am not taking cherry-picking points. I'm taking every point, every day, as the stock to flow goes. And I actually don't have the R squared. It's probably a good R squared, to be honest. I'm sure it's 90-some% what I'm doing. But mine is to the day. So these are apples to apples curves. You can see that there's clearly going to be a divergence. All right. Or at least what will happen is the stock to flow on the red, because clearly the black is a better fit, just will keep coming down as new data predicts. As new data is added, I should say, into the model. But here's the key question. Let's now go back using these two good models, and good I should use in quotes for the red one because it's just not, it's a shoehorn sort of ham-fisted way to run a power curve. Let's look from 2016, which is when the price power curve started to really solidify itself as a great trend line analysis and really show us what Bitcoin is doing. Let's go ahead and look at the 2016 trends for these precise coefficients, for their curves, for their methodologies. Okay, so one is a power trend on the stock to flow of Bitcoin. One is a power trend on the days of Bitcoin since the Genesis block. Let's go to 2016 and see where they look. First one I'm going to give you is 2016. All right, I'm going to put it up. I've talked about this many times. Here's the 2016 power trend. That is only data until 2016. I'll put it in a dotted black line now. It's there. You see it. You saw it was added to the chart. You can't even see it. You can't even see it. It's so good. You can't even see it. Barely can see some dotted lines here. So now we'll use the tooltip, even zoom in a lot. There's the difference. Got to zoom in a lot. Go to 1st September. Price of Bitcoin, again, 109K at the moment, pulled it into the model. All-time power trend with all days pricing data from Bitcoin Pizza Day 2010, 112. Again, that's 9K different than Fred and Co.'s power curve. It happens. We all get different data. I'm 9K off from them. But let's look at how my curve compares to itself with 9 years worth of different data. 9 years worth of different data. It's only 6K off. This is phenomenal. This is the sort of the one of the keys to why the power curve is so amazing. The solid black line has every single day of Bitcoin's data since Bitcoin Pizza Day. The dotted black line only has data until December 31st, 2016, and then calculates forward. And if I would show you 2017, 2018, 2019, 2020, 2021, 2022, I could show you all. I've done charts with that too. They're a little bit, some are a little bit higher, some are a little bit lower, but they're all more or less a few $1,000s different from the all-time trend. It's a phenomenal fit. It's a phenomenal explainer of what Bitcoin is doing. It's a network growing in power. So here's the kicker. If Plan B would like to all of a sudden become a power curve analyst, and Plan B would like to say that, this is sort of what he's been doing all the time, let's look at the stock to flow as it would predict out only based on Bitcoin Pizza Day through 2016 data, just as we did for the power curve. All right, here's the kicker. Ready? Now, this might not look like a lot on log scale zoomed in, but let's go ahead and look at the tooltip. Number 5, 2016 power trend data. This is about the highest signal I can give you guys as far as what Bitcoin does and why it's not the stock to flow is not going to give you the core fundamental idea of what Bitcoin does. Price will. Remember how I just told you my stock to flow versus Fred's stock to flow was 9K off? Happens. The power trend stock to flow through today, 350K. Again, that's 3x off the actual price. If you stopped calculating from 2016, it'd be 578K. Four or 5x the actual price. Whereas both the power trend through today, the power trend only through 2016 are unbelievably good indicators. I'm not even, this is not only about predicting future value. It is also that, but it's also explaining what Bitcoin is doing. It's explaining that Bitcoin is a network that grows in power, just like a city, just like certain organisms. It's sustainable. It's sustainable growth. Very pure, very easily observed power growth. So no matter how someone like Plan B, who was mixing exponential coefficients with power coefficients back in the day, no matter how much he would like to make it seem that he's, I don't know, on the power trend train now, while also saying that Bitcoin is an exponential asset, all very confusing words to throw out and unnecessary. You just look at the facts. You look at the data. And one is a very clear explainer of what Bitcoin does. That is a power curve on Bitcoin's price in time. That is a power curve on Bitcoin's price since the Genesis block. The other, which shows a power curve of Bitcoin's price over the stock to flow changes, does not accurately reflect what Bitcoin is doing. Sure, it will hit the price at a few points. Okay. But first of all, just take two different points in time of the stock to flow. They're very far apart. In this case, $220,000 difference. Whereas the two different power curves are 6K difference. And they're going to run off like crazy into the future, which again would be a great thing, but it's not sustainable. It's not realistic. It's also not what Bitcoin is doing. I've tried to explain stock to flow many different ways of why it's not accurate, why it's not, it's just not, it doesn't make sense. You have to understand that these are two completely different things. It's fine to cluster around Bitcoin pricing data, with at different periods and look at the different stock to flow things. Okay. And you can see that it is a power relationship. 100% it's a power relationship. Silver and gold are exponential assets. If you're going to say that, and by the way, he's changed these all the time. Like sometimes this is 60, sometimes this is another thing, by the way. Which one are you going to pick for gold and silver? Are you going to pick the all-time gold mine? Are you going to take away industrial? That'll give you different stock to flows. Are you only going to look at the bullion stock to flow? Because a lot of people, remember, this is a problem. The gold bugs like to say, yeah, I have no problem with gold, but the gold bugs like to say against the silver bugs that, oh, actually the stock to flow of silver is only like 3. If you look at all the bullion in the world of silver, it's only 3. But then they'll still use a 60 stock to flow for gold. You can't do it. It doesn't work that way. A 60 stock to flow for gold is the all-time rate. That's roughly 1.8% or 2%, whatever it is. It's just divide. Hold on. It's 1.67%. That's actually too high. It's something like it's something like probably like 56. I have charts on this. It's closer to 55. So they'll say silver, you can't, silver is such a bad asset. It only has a stock to flow of 3, and then throw in a 60 stock to flow for gold. It doesn't work that way. If you're going to throw in the 3 for silver, you better throw in only the bullion stock to flow for gold, which is closer to 20. It's about 20. I've done many videos of this. I've posted this throughout the years, even back to 2019 when the stock to flow sort of phenomenon was taking off. I never understood it. And hopefully you can just see by the raw numbers, it doesn't make sense. It doesn't have the explaining power of what price has over time, which really means adoption. Good morning, Turkey. Yes, it is more accurate. I don't even know how it's highly predictive of prices. Look, how would we model the stock to flow predictive power of gold? Because if we go back to one of these charts, right, Bitcoin does move on the slant, right, on log. Silver and gold do not. They're just going to move up and down. So how do we model that? silver would just, when it's lower in value, it'll be down here, still the same stock to flow. When it's higher in value, it's here. And same with gold. But again, which one do you pick? Do you choose the bullion? Do you choose the available that is non-industrial? Do you choose the all-time? Do you choose the official reserve one, in which case there is gold, there's nothing for silver? Sometimes they throw in platinum, palladium. It reminds me, this sort of talk reminds me a lot of how the silver bugs 15 years ago thought that silver was going to go to like $500 an ounce because its price ratio, that is the price of gold divided by the price of silver in dollar terms, was way too high historically compared to the mining ratio, which used to be 15 to 1, or it's actually closer to like 10 to 1. So they would just say, oh, well, it's going to go back to the mining ratio. Why? Who says it has to go back to the mining ratio? That was just something that was done at a specific time, at a specific place, mostly in Northern Europe, to value gold versus silver, and fixing it, which Isaac Newton was the first one to do, by the way, the master of the mint. Fixing it precisely created the problem that is called Gresham's law. Because when you fix the price of two commodities to one thing, like the currency unit, you create Gresham's law. Gresham's law is simply the presence of a capital control or an arbitrary control. And when you have arbitrary controls for two different assets, you will get Gresham's law, which is the bad money will drive out the good money. People will hoard the good money, spend the bad money. And so the United States dealt with this. Britain dealt with it at times. It's a horrible idea to do the mining ratio, in fact. It provides some short-term stability in the value of the currency unit, but over the long term, you will always, 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 always get Gresham's law. It took 100 years for the United States to get rid of it. The United States in the code, the original code, and see Vieira, I can't remember his first name. Edwin Vieira, I think his name is. Check. I can't find his name right now. His name is Vieira, last name Viera. He's a historical law professor and historical economist. The code was more favorable to silver, and it favored silver as sort of the main currency, the main sort of money to use in a lot of transactions back in the day, which was, the number was something like 347 grains of silver, which is like 80% of an ounce, basically, was defined $1 back in the day. So you can think about that today. Roughly 80% of an ounce was the unit for $1 when the United States was founded. That's the value. But at the same time, sadly, they also fixed the price of gold to silver. Even though silver was like, the United States was actually on a silver standard when it started, but it was a bimetallic. It was a silver standard, but it was also, they fixed the price of gold. It was just wacky and unnecessary, and you get Gresham's law. So why would the price of silver go back to that in a free market? So that's why, I'm just picking numbers now, but the ratio now is, that's close to 100 maybe. I don't know what it is. It's $35 an ounce silver. Let's just check really quick. I should have put some of these on preparing. All right. We have, it's a little bit under 100. So 3,473 divided by 40, 86 is the price. That's the market ratio today of gold to silver. All right. So what the silver bugs were saying 50 years ago is like, it's going to go back to the mining ratio with no explanation of why it would go back. A mining ratio, which was fixed by governments for hundreds of years, started with Isaac Newton. Why would it go back to that? Can someone explain it? It's just like, why does the stock to flow have any predictive power of market value? Can someone explain that? Can you explain it? So anyway, you would take, what they would do is they would basically take the gold price and only divide it by the ratio. So in this example, let's say the gold price is very rough numbers, $3,500 an ounce. Only divide that by 15. Silver's going to $233 an ounce. People will come up with wacky ideas to sell a newsletter any day of the week. How many times have I tried to say this in my little corner of the streaming podcasting space? That's why you get it all for free here. No value for value. It's on my site, by the way, if you want to donate to my BTC Pay server. Thank you. So anyway, I got it here. I hope that explained it. I'll continue to come back again and again and again to this. The numbers are right here. It's not that complicated. There is no predictive power of a stock to flow number. And again, I'll say this 1,000 times. An exponential asset, which is silver and gold, they don't move. Their stock to flows don't move. They stay the same. So value would either go up or down, up or down, up or down, up or down, up or down. The number has been the same for hundreds of years. It's been about 1.8% or 55 for gold. And actually, silver has come off with a stronger stock to flow. Oh, I've said this too many times. I'm sorry for those of you that have listened to me and know that I sound like a broken record here. There are so many nonsense ideas behind the idea of valuing something on a stock to flow basis. It's the same thing like silver bugs 15 years ago saying that silver is going to go to only 15x gold. And why would silver multiply by 15x versus not gold collapsing by, down to 15x? They don't explain that part. Silver's got to explode. Gold does not have to collapse. Yeah, I got no problem with silver. I got no problem with gold. I got no problem with platinum. No problem with palladium. This is not how it works. That's called price fixing. The only reason Isaac Newton set the value of gold relative to the value of silver when he was master of the mint was for short-term price stability. And it generally never worked. It always had to. I mean, it did work in the short term for price stability. It gave people sort of a framework in the short term. But over the long term, 100% of the time, always and everywhere, you will get Gresham's law. That is the correct definition of Gresham's law. Anytime a government fixes the price of two, not just one, but two units to this, two different commodities to the same unit, you'll get Gresham's law. Then you will get bad money driving out good. All right. I feel like I'm lecturing too much on this, so sorry. Let me know if you have questions. But Giovanni talks about this a lot. I've talked about it. It's a ham-fisted way to do stuff, and I don't really know what his point is here to try to show a 99.6% R squared plotting 1, 2, 3, 4, 5 points. Notice how he doesn't plot over 100,000 here, which would seem weird since we're over 100,000 right now. Wouldn't he want to show that? Again, there is a power relationship. It's true. There is a power relationship. There's not an exponential relationship. Silver and gold are exponential. So if the philosophy of your model in deriving your coefficients, which are right here, is this, then it's wrong. All right, and here's just the brass tacks of it. Okay, this actually, you might even seem like think on first glance, it's actually kind of good. It's not actually, because look here, and your trend should not have the goal of predicting tops. I understand the 4-year cycle is a big thing in Bitcoin. I don't deny that. 100%, I don't deny that. Some people are trying to downplay that. I'm not actually, but that's not what the point of a trend is. This was actually his best looking trend, probably for the 2019. Yeah, 2019. 2020 was probably already gone. Yep, it was gone. So again, arbitrariness all the time. But anyway, looking at the at least correct way, which is this in the red here, Only look at Bitcoin. Don't do coefficients from gold, silver, platinum, palladium. Only looking at Bitcoin's price versus the stock to flow, you're still hundreds of thousands of dollars different from both the price and the power trend. So what's the point? What's the point of this analysis? And this one, I just got to say this again. A model like this has no basis in any classroom. This is so absurd. Silver, gold, they do not move on this line. They don't move on the diagonal. This is a Bitcoin stock to flow. It's fine to use only Bitcoin values, but silver and gold will move up and down. Their stock to flows are constant. They are exponential assets. Their growth rates, i.e., their stock to flows, are constant rates. All right. And let's go back to a constant rate with Bitcoin. That's a constant rate. This is a constant rate. How does that look for Bitcoin? Looks great. I'd love to have it, but we're way off this curve. $600,000 Bitcoin on a curve. Versus the power trend, where we're right on it, moving into a bull. We got, at the worst case, what is my 10%? I need to go back here. Let's go back here just to not give you any... Are we on dollars? Yeah, we're on dollars. Worst case, in 2022, we got to 0.3x, 0.4x, right? 65% drop, 68, almost 70% drop, whatever it was. 0.3x the trend. And on the best case, we got to typically, and this is very rare, again, this is very rare, 7.8x is very rare, but typically, let's say, 2x the trend. Typically 2x the trend. We did not calculate typically, on a trend, nothing makes sense here because this is 4-5x the trend. Sorry, the trend itself is 4 or 5x the price. At one point, it overhit it. It overlaps, and then it goes way under. I will keep trying to do it. If people have questions here, if you want to push back or you don't understand it, you're not quite sure what I'm saying. Exponential curves are very specific. And I think the hard thing for a lot of people in finance, including said people who I've been sort of running critiques of today, their whole upbringing was around assets that moved in exponential. So they only just assumed that Bitcoin would also move in exponential. But Bitcoin, as we know, is so different from so many different things in the world. It shouldn't surprise you. After time, after learning about the system, understanding it, the growth is completely different too. The growth is a sustainable, proportional is the number, is the word, sorry. Proportional. Proportional is a key word with the power curve. It's proportional, scale invariant. With exponential growth, the word is constant. Constant. Bitcoin does not have constant growth. I'm sorry to tell you, if you're hanging your shingle on that idea, and for some reason, people sort of keep doing it, also while confusingly mixing in some power curves, Bitcoin does not have constant growth. It has proportional growth, has sustainable growth. It's not a great fitting curve. We've been off it since May of 2022. Last time we really intersected was February 2013, and then basically above it for 10 years. Doesn't make much sense. Pierced it a little bit in 2020, but why would this be a good curve to use in trying to explain what Bitcoin does? All right. Sorry, guys. I have to lecture every once in a while. Too much, probably. But let me know if you have questions here, as always. If you are curious, I do have the stuff to charts. It's still the only chart on my redone website. I had more charts in the old website, but not right now. Got the power curve. It's monthly frequency. You can see everything. You can see the percentiles, which I need to. I think I want to get these into the 10th percentiles. You can see my coefficients. You can see it on log, which is the beautiful thing. This is when you can really see how strong the power curve is. Just a straight line on log. That's what a power curve does. You can't not look at that curve and tell me it's exponential. And you can't look at that curve and tell me it's not power. Here's the proportionality again. So I have this on my site. So if you want to keep the idea of doubling, that's fine. Okay. Gold is on a trend that doubles constantly. Silver is on a trend that doubles constantly. The stock market is on a trend that doubles constantly. They have different compound growth rates, but a compound growth rate is a constant return. Bitcoin has a proportional return. Okay, so let's keep the idea of doubling. Here's the idea of doubling: 6 cents, 12 cents, 25, $50, so on and so forth. Notice how the days to double are not the same. If Bitcoin was an exponential asset, which has been erroneously, confusingly sort of seemed here because you're using exponential silver, exponential gold. If Bitcoin was really an exponential asset, these days would all be constant to double. Whatever it was. 2 years, 3 years, 5 years. You see that the days grow. So there's a slightly asymptotic or a disinflationary, a slowly decrease in the rate of doubling. All right. So the days are increasing. Okay. The years are increasing. But proportionate to the days that have been existing in the system at the time, here's your proportional number, which is 12.7%. So notice what it says here. Increase in time to double. This means for every 12.7% increase in the life of Bitcoin, which is denoted in this column, the price of Bitcoin doubles. That's the curve that we're running at the moment, and we've been running at basically since 2016. There is just nothing exponential about it. It's a really important point to understand. Okay, so let me put up, again, an exponential asset, such as gold. Such as gold. Give me 1 second. Okay. So here's gold. Here's the price. Okay, there's the price. Log scale, gold price. We can draw a trend line on this gold. Let's take this off. We can draw a trend line on the gold price. Okay. Where's that trend? It's right here. Decent trend, 78%. It's the best fitting trend. Power trend does not fit gold at all. 78%. From this curve, that is the black line, we can project out to the future, but we can also find the generalized growth rate of what gold does, which, by the way, is a way better mathematical. This is a Jim Simons way to do it, as opposed to, like, I don't know, most financial analysts. It's not the average. It's a trend. So if you were just to, I don't know, take gold's growth over the last year, 2 years, since the 90s, it's true. You'd get all sorts of different growth rates, right? You'd be fast here, negative here. You get all sorts of different growth rates. But to understand what gold actually does in the market, a trend line is way better, infinitely better than sort of average growth. That's an important point. But anyway, to find the slope of this curve, and by slope I mean the annualized rate, let's say. We always quote exponential growth as annualized rate. I put it here. That's this solid black line, which moves across. Now we're looking at the right axis. Okay. 5.2%. 5.2% is the since 1971 growth rate of the gold price. Okay. Now let's look at the lifetime lifetime doubling. This is much better, by the way. Lifetime doubling is a way better figure than stock to flow because you figure out the percentage, and because it's a compounding thing, doubling time will not necessarily be intuitive. You have to figure it out. So, for example, if an asset increased at 10% per year, does it double in 10 years? The answer is absolutely not. It doubles rule of 72 in 7.2 years. So constant growth gives you this effect. It's actually faster than you can intuit. It's extremely fast growth. It'd be great if Bitcoin was growing exponentially. It is not. 5.2% lifetime CAGR for Bitcoin doubles every 14 years. Doubles every 14 years. That is what gold does. That is what gold has been doing in the free market era. You can talk about gold suppression. That's interesting stuff too, but that's what it does. Notice, by the way, we're way over trend. Way over trend since 1971. The 1971 trend line says we should be at $2,000 an ounce right now. We're at 3,500. So gold bugs who love Peter Schiff may want to think about this chart a little bit, where you are well overvalued relative to the Bitcoin price trend. Only going to cost you 36 ounces of gold per Bitcoin, as opposed to what the trend says it should be 60 ounces of Bitcoin. So think about that. But back to this chart. No, where's the chart? There we go. We can still intuit stock to flow, which is a sort of a caveman way to intuit. Is that would be generally, it's not the time to double. It's just 1 divided by. So doubling rate is way better, the gold, right? As a formula, it's log base 2 divided by the rate. The rate divided by log base 2, I believe, is the formula. Doesn't matter. You look it up. It's very easy. The very simple way is rule of 72. Okay, so take the percentage CAGR, drop the percent sign. How many times is that going to 72? Okay, that's the time to double. So a 10% return does not double in 10 years. You take 10%, drop the percentage sign, you get 10. How many times is that going to 72? 7.2 times. That's the most pure rule of 72, by the way. A 10% return will double every 7.2 years. So gold doubles every 14 years. It has a worse than a 7.2%. It's only 5.2%. Not great. It might improve, all right? And by the way, every time this gold price is above the black line, it also pulls the trend line up, just like Bitcoin. So there's nothing fancy about it. It's good for gold bugs right now. But the stock to flow is like the most caveman figure you could use. And like economists use it. They think it's like an interesting thing. It's not even scientific. I mean, stock to flow is 1 divided by the CAGR. So again, in price, not in ounces terms, but in price, they're both exponential, by the way. It doesn't matter if it's ounces or price. It's 1 divided by this will get us to stock to flow. What's 1 divided by? 19. All right, so the caveman would look at this 5.2% CAGR and say, oh, it doubles every 19 years, which is incorrect. Actually doubles every 14 years. You have to do the very simple log base 2 calculation, but the caveman, sort of economist caveman, would look at stock to flow like that has somehow a reasonable thing to look at. And put a stock to flow of 19. All right, so in price terms, gold stock to flow is 19. Now, let's look at gold in ounce terms, in native ounces. And again, which one would you use? Very important. But I'll stick with gold all time as a number. And let me throw that up there. Okay, it's coming. It's coming. It's a hell of an R squared. nearly 100%, rounds to 100%. This is all-time gold ounces mined. Right? We're at 7 billion today. Okay, 7 billion in August 2025. I have not updated this past August 2025 because it's September 1st. This one actually worked pretty well as far as automatic updates. Not all of my charts do. See, we're a little bit hot, slowed down in the 80s. Actually, interestingly, during the bad years. Now we're about pushing trend, a little bit ahead of trend, by the way. Okay. But a very good R squared. All right. So the trend line itself, very close. This is a great estimation of where the growth of gold could go. However, is it a good explanation of where the growth of price can go? No? Anybody? This again should help us with stock to flow fallacies. The R squared of gold coming out of the ground all time, not even accounting for industrial gold, 100%. Looks great. Very predictable. If you're a miner, this is what you do. How much do you get for that gold in dollar terms? To be determined by the market. I see no correlation with stock to flow. 0. If the stock is here, and the flow is also here, by the way, because stock to flow is just, I'll show you stock to flow in a second. If the stock is 100% R squared, why is the market price of gold only 78% R squared? Your guess is as good as mine. The market, maybe stock to flow has nothing to do with market price. I've done this for silver, by the way. You can do it all the time. But anyway, let's go back to our little exercise. What's the lifetime CAGR of gold? There it is. Since 1971. This is higher if you pull it back farther, but latest of the trend, 1.7%. 1.7%. Okay. Doubling time, 41 years. That's a good number to look at. The stock of gold, that is the trend line itself, will double every 41 years. And that's a constant doubling. You notice it doesn't change, it doesn't go down, it doesn't go up, it's just constant. So when people say like gold is a fixed asset, it's not. It doubles every 41 years. Currently, it's not a fixed asset. Just quite simply, it's not. But then the caveman way, the stock to flow way, let's just, doubling rate, of course, is not good enough for the stock to flow economists. So let's take the caveman way, which would just take 1 divided by the CAGR to give us our sort of all-time stock to flow. There it is, 59. 59. And it'd be even lower, by the way, if you went a little bit farther back, but no matter. There's your 60. There's your 59. Okay? But back to this, this beautiful cross-asset model. So here's his 59. This is very close to 60, actually. He might have used 59, even 58. Who knows what he used? It's right here. Why would this have anything to do with the value of Bitcoin, which stock to flow changes all the time? Bitcoin stock to flow changes. See, it changes. Gold does not. It does not. I need arrows on this example. It just, if you tracked this over time, it would be down here. All right, gold back in the, whatever, 70s would be down here. And then it just moves up. Stock to flow stays the same. So when you have a gold asset that moves vertically on this chart versus Bitcoin, which moves diagonally on this line, because that's the nature of Bitcoin, what is the relationship here? Why would you put two exponential assets, and he's used platinum and palladium as well, why would you put them on this chart? Furthermore, Don't tell me that it's that 60 is the only way to do this. We could do a stock to flow of gold for bullion. We get completely different numbers. How those numbers relate to the market price of gold, your guess is as good as mine. Let's do gold stock to flow on the bullion. All right, I'll pull this up now. This one is even funnier. Okay. Here is gold on gold bullion. Gold bullion. Gold bullion that is in central banks. Gold bullion that is in private bullion banks. Estimated to be in houses, safes, buried in backyards, pirate treasure. Who knows? No one knows for sure. But it was sort of fixed this way from 1971 until 2010. And then from the global financial crisis, whoop, went up. This is no doubt going to be good for gold's price in some way because people are buying this bullion. But it's hardly a great trend. In fact, if we run a trend line, it's still exponential. It's the best fitting trend line, 63% R squared. We're way over trend. So the trend doesn't even actually tell us as much as we would like it to. All right, so it's not necessarily helpful over the long term. Right, it does intersect right there. But we probably, to be more precise, it's clear that we've set in a trend since 2008, so we could run a trend line here. But what's the trend line of gold from 2008 going to be? It's going to be worse or better? And worse means in ounces terms, if it's lower, that is the unit growth, which is the correct way to think about it. If the unit growth, percent growth is lower, it's better, right, with ounces. If it's higher, like it's going here, clearly if we draw a trend line, a black line over the actual ounces, it will be higher than the all-time line. So does that help us more with the gold price calculation based on stock to flow figures? Anyway, lifetime CAGR, 0.7%. Okay, it's grown faster recently, but since 1971, it's overall slower. It is growing faster recently than actual all-time ounces coming to the ground, which is very specific and very precise. Doubling rate, 104 years, 104-year doubling rate for this. So this is actually much better, right? And now caveman, stock to flow, 150 years. On the trend. Why would that be, necessarily correct? Or what about just taking, the last year? Okay, August to, let me see. I'd have to pull this up actually to give you this is a good discrepancy here. Just give me a second. I'm going to pull up on the bullion in ounce terms and give you the last year. So these are trends, all right? These figures, trend lines, and they're very huge and they're very different. They look great. The lifetime bullion stock to flow is 150. So why shouldn't we use 150 in this chart for gold? Why shouldn't we put the gold stock to flow way over here? It'd be way off this line. Okay, let me show you the actual year difference. So if I went to August 2024 Need that number. Okay, 2.5%. So 1 divided, it's actually 40. 2.59. It's 40. 38. The number closest to 20, which I was quoting earlier, I think is central bank changes. Another number still. But anyway, I get about 38. So let's go back to this chart. All right. A year, let me tell you exactly what I'm looking at. If we look at just the 2008 trend of gold bullion, all right, August 2025 is about 2.82 billion ounces. And August 2024 is 2.75 billion ounces. All right, August 2024. Okay, very simple. So that change is 2.59%. That's your flow of new bullion that came into the bullion holding, the bullion stock. 1 divided by, which is the caveman way to do it, 38.6x. Why don't we use that? Why do we use 60? There are so many things wrong with this. It's really hard to begin to explain. But hopefully I have done it. Hopefully you have been able to get a little bit of that. This dot and this dot has zero to do with these dots. They're not connected in the real world. They're not connected in the digital world. They have nothing to do with anything. I could take the bullion trend line and give you a stock to flow that's way out here to the right, like 150. I could take the actual bullion change in the last 12 months and give you a number that's more over here, 20, 30, 40. It's to be over here. It'd be closer to silver even. This is about the all-time number. Which to choose? Which stock to flow number to choose for your model? On top of that, these move up and down on this chart if you would observe them changing over time. Bitcoin, as you see, this is correct, obviously. Bitcoin moves in a power relationship with stock to flow because Bitcoin moves in power. But it's kind of a ham-fisted one. It's not as accurate. And as I've tried to show already many, many times, if you look at the predictability of, say, the 2016 stock to flow versus the all-time stock to flow, should I give you a precise figure? 578 divided by 350. You're 65% off. You're 65% off. Whereas if you looked at the power change, the all-time power versus the all-time, the 2016 power, you get 117 divided by 112 roughly. You're 4% off. So hopefully these little exercises can show you that it's just not explaining what Bitcoin is doing. It is a true statement to say as Bitcoin's stock to flow goes up, Bitcoin's value goes up. That's true. It does not tell us any more than that. It doesn't tell us any more than that. The predictability is bad. It's usually overshooting it. It's giving it too high of numbers. All right. If you want to take weird cross assets using like gold, silver, platinum, palladium, then you get into this concept, which again just does not apply. It does not apply to silver. It does not apply to gold. If I say the phrase, let me repeat. it is a true statement to say that the Bitcoins, if the stock to flow of Bitcoin increases, the value also increases. That's a true statement. It is a hashtag pound air statement to say if the stock to flow of gold or silver increases, the value of gold or silver increases. You're at a hashtag air. Faulty statement. Invalid. Because the stock to flow of gold and silver, depending on how you measure it, stays the same. They're exponential assets. They're constant growth assets. They stay the same. They stay the same. And anyway, stock to flow is, as I said, let's go back to all, no, this is all time. Stock to flow is caveman because really you need to be looking at doubling time. Doubling time, they quote stock to flow like it is the value, the time to double, right? Really, it's doubling time is the time to double. Do you understand the difference? I'm sorry, I'm speaking to myself now, but stock to flow is very simply, it's either the 1 year sort of run rate, or if you're going to take the long-term trend, then it's just 1 divided by. You want to look at the doubling rate if you're going to think about exponential stuff. Doubling rate is different than the way economists calculate stock to flow. So it's yet another reason why stock to flow in totality is a sort of back of the envelope at best, caveman at worst way to look at anything. Anything. I will repeat that. Stock to flow is a back of the envelope at best method to look at markets. It's caveman at worst. There's no reflection of reality. I just showed you gold has a stock to flow of 60, which is completely different than its doubling time, which is 40, which is completely different than its price, which is 5.2%, or a doubling rate of every 14 years, which, if you want to do, again, the caveman stock to flow is 19 years. Which is correct? Which is the number that we throw into our cross-asset model, into Bitcoin stock to flow, which has nothing to do with it? I probably should write a paper on this, right? I'm too deep in the numbers not to write a paper. Good afternoon, Tim. Hope you're well. I've just been ranting on stock to flow. On the inexcusability of it. But anyway, Giovanni's gone on it as well more. Where's his post? Here? No, here. Here. So you can read his work about the cluster idea, trend lines on clusters versus trend lines on normal scatter plots, which is like using something like time. So trend lines on clusters, which is also what stock to flow does, is not, it's not really the best way to do it, let's say. Anyway, this is what Bitcoin does. Bitcoin is proportionate. It's scale invariant. It's sustainable. It grows on a nice, beautiful curve on log linear. And it grows on a nice straight curve on log over time. Tim, let me know if you want to see a chart. I'm happy to show. But I think I'm running at my time for today because I've exhausted most of the ideas. Need to change my office, I know, but sorry, I know my ISO is looking pretty dark at the moment, but it is what it is. When you have sun versus cloud cover, it's better to be in a real studio. Here's another thing, by the way, to show you. This is tabularly in a table showing you exactly what I showed here. All right. So let's take off the erroneous, exponentials, whatever. Notice how the 2016 is 118,000. All right. That's what, if we stop calculating from 2016 and project, that's what we get. All time with all the data is 112. Projecting from 2016, 118. I have that again here, which I think is very helpful. This is actually one of the another unsung heroes of my site as far as look at this. It's true. Bitcoin is growing very fast at the beginning. You know, extreme rates of growth. If we stayed on the 2010 trend line, we would have $5 billion Bitcoin, close to $6 billion today. 216 million for 2011, 267, 2012, 778. This is today, what the trend line predict. A million, 2014, 250 for 2015. But this is the point. From 2016, we really settle into something nice. 118, 131, 156 from the next bull, 2017. Back down 138, 123, 148 from the next bull, 133. Now we're going down 115, 112, 112. I fully expect this to jump again in the next bull. And I need to plot this out. I've realized actually over time, show you what the projection would be until today or until a certain date. That would be very helpful, but I don't have it yet. So there you have it. On this table, you'll be able to see from 2016 until 2025, the power curve has been damn near right on it, with a worse deviation of, this would be 156 divided by 109, 43%. And did I just say something? I'm realizing back what I looked at. Let's go back here. Let's look at how far the power trend was off. I was actually telling you the power trend off from itself, but we need to look how far the power trend is off from the price. Or sorry, the stock to flow trend. So the stock to flow trend, the stock to flow trend 2016 is 570. All right, sorry. The stock to flow trend 2016 is 578 divided by 350. All right, you see 578 divided by 350. Let's just get the exact. 1.65x. I think I said 65% before. It's nearly 2x different. Sorry, too many numbers on the fly. And then let's take the 2016 divided by today's price, which is 109. All right, so 578 divided by 109, that's 5.3x off. Minus 1, 430%. That's 430% difference. Whereas the worst difference from prior year's projection until today's price is like 45%. So another example, another data point. We're 10x better. We're 10x better on the power curve versus showing what Bitcoin is actually doing than stock to flow. So next time you see a cross-asset picture like this never makes any sense. No silver, no gold, no platinum, no palladium. These are exponential assets on a power plot. It makes zero sense. As well, are you going to use the, stock to flow of gold price as a model? Are you going to use the stock to flow of gold ounces all time as a model? Are you going to use bullion ounces? We could do available ounces. I have that as well. All different ways to do stock to flows. Nothing here seems to show how it's driving price. By the way, look at this. Central banks have been reserving gold like mad since 2008. Has the gold price reflected that since 2008? I see flatness. A little bit in 2011, then flat, and now up again. Just one additional data point for you there. All right. I think it's enough for me for stock to flow and maybe enough for today. But I had seen these issues in the last week and just want to make sure people are crystal clear. I have plenty of questions. Of course, he won't answer, but that's all right. I am all good to continue sharing with you guys as we move into this bull. I think I had one from Plan C. So this guy's obviously a great follower of the power curve. Talking about significant sell pressure. This actually is not the tweet I wanted to come. I wanted to talk about. He's on. Will the 50 to 80% drop never come? The 4-year cycle crowd will sell over the next 2 to 6 months. The question is, yeah, this is a good question, by the way. What will they do if Bitcoin only drops 20 to 40% and then rebounds quickly? Great question. It's the hardest thing in the world. It's why I doubt anybody's unless you're just like the most machine-like investor, it's very hard to sell Bitcoin when you get into these bands, right? Because even look at these prices. Anyone would want to buy Bitcoin at these prices. $4,000, $5,000 per Bitcoin. You had to wait 7 years to get to, where we are now, obviously, prima facie. But this is the hardest thing in the world to sell Bitcoin at these levels, above the 90%. Hi, Daniel. So I think this is a great warning as well. 100%. This is the, we have to think about, as Wall Street gets in, as everybody else gets in, there must be a lot of people thinking about this. They've heard about the 4-year cycle. They've heard about the trends. They might not even understand the power curve, but they know, Wall Street is obviously smart. They're in the game more than ever. Could they front run a drop? The drop occurs, they buy the dip, and we never come back to that level. We're much higher. All possible. My base case, though, and I'm pretty, Fred's talked about this a lot. Like, just pick a number if you're, it could be as low as 1%. I mean, pick a number of something that you're okay with, a lifestyle choice if you do want to lighten up your Bitcoin into fiat or whatever you need to do. Pick a number, 1%, 5%, 20%, 50%, pick a number, and probably stick with that if you're truly okay with it. That's the first thing, never financial advice. But the second thing is, if you look at this Bitcoin in S&P, if you look at this Bitcoin in gold, these are even more reasons, in my opinion, why we're going to shoot back higher. It's just, to me, it's as simple as I'm not going to discount the 4-year. I'm not going to discount these major extensions over trend until they don't happen. And the good part about that is, by the way, if you have that view that I'm taking, again, try to ease the Malox moments, then you don't sell. Never financial advice that you would sell at these points. But if we stay on trend, if you stick with me, and the guys running the power curve stuff, if we're on trend, then we're on trend. And if we drop down to 40%, I'm definitely not selling in the 40th percentile, the 30th, 20th. I'm not selling. I'm buying. So just trying to think of different ways to tweak our minds to not go crazy in the next 5 to 6 months. But this is a good point, right? This is a good thing to think about. What will they do if Bitcoin only drops 20 to 40% and then rebounds quickly? All right, you think about that. All right, guys. Thank you, as always. My friends in the chat, all channels, even Twitch, which I know I'm like a horrible user, but maybe some people like it following from there. That'll be it for today. If you want to revisit these difference in stock to flow models, exponential models, power curve models, I'm happy to do it anytime. And The next thing to do, I think, is follow checkmate and understand the profit and loss per coin, because there's a lot of coins that are coming out of the market now from like 2011 holders. Good night, Tim. Daniel, have a good day. Thank you, guys. Take care.